So our next lesson is going to be on taking control of finances. I'm sorry that this is a little bit late, but the homework will be due Friday. So one of the key or a few of the key issues for controlling your finances are listed above. Know your bank balance, avoid bouncing a check or have a debit card be rejected. Know what you spend, keep track of debit and credit spending. Don't buy on impulse. We all like to go on Amazon and just buy things all the time. It's so easy, but try to avoid that. Think first, buy if it makes sense, and make a budget and don't overspend. So, we're going to go through just a few examples of how we can identify these types of situations. Latte money. So, Calvin isn't rich, but he gets by and he loves sitting down for a latte at the college coffee shop. With tax and tip, he usually spends $5 on his large latte. So that's a very key number right there. He gets at least one a day on average, and about every 3 days he has a second one. He figures it's not such a big indulgence, is it? Well, let's figure out what he actually spends every day for 1 year's time. So if he's buying a latte at $5 each day for a year's time, we need to determine what kind of spending he's doing. So, one latte a day is going to be $5, and 365 days in a year, and you can use your calculator here, you're going to get 1825. So that's how much he spends if he were to get one every day. Now it says every 3 days he gets a second one. So if there's 365 days in a year, we can divide that by 3 to determine how many extra he would get if he's getting one every 3 days. So that's an additional 121 more lattes per year. And at $5 a latte, he would have, and again, you can use your calculator, $605 extra. We all like our Dunkin' Donuts, Starbucks. I mean, I'm definitely guilty of this. And then when we add our two values together, which if I can circle them, we can see that he spends a total throughout the year. So this is a grand total. And again, it's approximate. Maybe he doesn't get every 3 days, but we're going based on the information that they gave us. So the total spent on just lattes for the year is $2,430. Now, to some of us, this might not be a lot of money, but to others, it might. So it really is a matter of, what kind of finances you have, what financial position you're in. Cassidy has recently begun keeping her spending under better control, but she still fully can't pay off her credit card. Boy, we all know that too. She maintains an average monthly balance of $1,100 and her credit card charges 24%. Now, this is the key word, and let me get a different color to really emphasize this. Annual interest rate. Okay, and now it should make sense, the next part, which it bills at a rate of 2% per month, because if it's 24% and there are 12 months in a year, then that's 2% per month. Okay, so how much is she spending on credit card interest? Well, 2%, now remember this is the monthly, of $1,100. Remember the percent, you move 2 to the left. Okay, an oldie but a goodie, that's a 2, it's a fancy 2. Of means to multiply, gives me $22. So she spends $22 per month. Okay, so that's per month. Or if you wanted to determine the yearly, you would multiply that by 12, and she spends $264 per year on interest. Okay, now we know there are other factors when we deal with credit card interest in general, but that's certainly a nice amount to have to spend extra. So we definitely want to consider keeping that at a lower amount. So this is all in the textbook, but there's a 4-step budget making process that you can follow. You want to determine your average monthly. cash flow, or your monthly expenses, I should say. So I'm just going to throw in the word expenses there. That is an important word to know. So that's how much you're spending per month. Be sure to include an annual monthly, I'm sorry, this is an annual income. This should, because the expenses is next, sorry. So this should really say income. Okay, sorry about that. And of course, include any income you do not receive monthly. So if you're getting a once a year payment, we'll talk about what we do there. Determine your average monthly expenses. So that's how much you're paying per month. And again, if it doesn't occur monthly, like tuition, books, vacations, we'll talk about that. Determine your net monthly cash flow, and I'll show you guys how to find that and make any adjustments. So here's our first example. In addition to your monthly expenses, you have the following college expenses that you pay twice a year. $3,500 for your tuition each semester, $750 in student fees each semester, and $800 for textbooks each semester. How should you handle these expenses in computing your monthly budget? Well, first of all, if we have, assuming we have 2 semesters, that's what this is going by. So we're paying twice a year. Let's start with the tuition, $3,500 twice a year, which is $7,000. $750 in student fees each semester, so 2 times $750, which you can do that in your head, but that would be $1,500. And then 2 times the $800 in textbooks, which is $1,600. So what I'm doing right now is I'm determining what the yearly amount is. And I like to do, there's different approaches, but then we can take that amount and divide by 12 to figure out the monthly budget. So when you add these values together, you're going to get $10,100. Now remember, this represents yearly. And then to find monthly, we divide by 12, and it's about $842 per month. So that's how much you would consider spending on fees per month, tuition included. Brianna's creating a budget. The expenses she pays monthly are $700 for rent, $1,200 for gas, and I'm going to let you guys read the rest of this because there's a lot of words here. So let's talk about how we determine a monthly cash flow, and I'm going to write step by step how we do all of this. So step 1, in any problem like this, is we want to determine the monthly income. Okay? Because we're talking about monthly cash flow. So let's go through all the things that she spends. So this is the income, not what she spends. Okay, so we have income. That's the last line here. Her income after tax paycheck is $1,600 a month. And then she receives a $3,000 scholarship at the beginning of the school year. So if that was at the beginning of the school year, we want to determine how much she would get each month, because that's a yearly amount. 3,000 divided by 12 is going to give me $250 per month on her scholarship. Okay. So in total, $1,600 plus the $250 a month, she's going to have a monthly income of $1,850. And let's box that in for now. Step 2 is to determine her expenses. This is monthly again. We want to stay in terms of the same amount. So monthly expenses. Now this you have to go slowly with because there is a lot of information in the top. I know you can't see it there, but you should be following along. So let's start with each value. $700 a month for rent. Remember, these all get added. The next thing she has is $120 a month for her car, gas, $140 for her health insurance, $75 for auto, $25 for renters, $110 for the cell phone, $100 for utilities, I might have to extend this page a little. Okay. 100 for utilities, 300 for groceries, 250 for where are we? Entertainment, and that includes eating out. So this is her monthly amount that she spends. And again, when you take your calculator, you can just add these together. So let me just make sure that my math is good. Okay, so that should be about $18.20 as a total. So that's just for the monthly amounts. Now, when you go to here, it says, in addition, over the year, she spends these amounts on the rest. So we're going to add these up, and then we'll divide by 12 to figure out what would it be on average per month. So the yearly amount spent. So we kind of do this in a two-step process. So yearly, she spends $1,200 on college. That's a big zero. Oh, let me get rid of that. I don't want anything to be too confusing here, so let me just kind of restart that number. So $1,200 on her college. Maybe I should use a different color here for this too. So $1,200 for her college expenses. $12,000. $1,000 on gifts. $1,500 on vacations. $800 on clothes, and $600 on charity. She's generous. For a total of $15,900. Now remember, that's a yearly amount, so we're going to divide that by 12, and we'll get $1,325 per month. Now we want a total monthly expense, so we're going to take the $1,820 plus the $1,325, and on average monthly, it's $3,145 she spends per month. And I'm going to box that in. Okay, so the $1,850 is her income, and the outgoing amount, the expenses per month, is $3,145. Now here's the final step. Step 3 is to determine a monthly cash flow. And we do this by taking the monthly income minus the monthly expenses. Obviously, if you're spending more than you're bringing in, you're going to have a negative amount. If you're spending less than you're bringing in, you're going to have a positive amount. And if you're breaking even, it should be 0. So the monthly income was $1,820. The outgoing, or the expenses, was $3,145. Negative, that's going to be $1,295 per month. So she's spending more than she's taking in. So I'm going to make a little note here. Let me actually sort of type that for you guys. Let's see. I guess I'll just write it. So this is going to be, she spends more, $1,295 more than she's taking in. And if they asked you, they didn't in this question, but if asked for an annual cash flow, you could just take this negative $1,295 and multiply it by 12, because that would give you the annual amount, and that would be negative $15,600 per year. So obviously her finances are not in check. Next example. So insurance costs. The premium is the amount you pay to purchase the policy. A deductible is the amount you are personally responsible for before the insurance company will pay anything. And a copayment is usually applied to the health insurance and is the amount that you pay each time you use a service. According to one estimate, the average cost of having a baby is $7,000. Fortunately, you have health insurance, but your policy has a $10,000 annual deductible, a $250 copayment for any visits, and pays only 80% of the remaining balance. How much will you pay out of pocket for the cost of having a baby? Assume you haven't had any medical expenses in the current year. So we're trying to determine that what we would pay based on out-of-pocket expense. Okay, so starting with, and this of course is assuming that you have the health insurance plan because they said that. Okay, so let's start with listing our information. So we have three components to this problem. The first component is the annual deductible, which is $1,000. The second amount is the copayment, which is $250. And the third amount is the share of the balance. So the 80% of the balance is paid by the insurance, paid by insurance. So if they pay 80% of what's left, you pay 20% of the remaining because they're going to pay 80, so you're paying the 20%. So these two numbers give us $1,250. That's the out-of-pocket cost that you have to spend before anything. The cost of the baby is about $7,000, or giving baby, not buying the baby, but you're going to give birth. And then you have $5,750 remaining because it's taken off from the top. Now, the insurance company will pay 80% of that, so you're going to pay 20% of that. And we would find that by doing, again, 0.2 times 5750, which is going to be $1,150. So this is how much you have to pay after you pay your deductible and your co-payments. So the total out-of-pocket costs would be the $1,250 from the deductible and the copay, $1,150 from the 20% because the insurance company will pay 80%, $2,400. Next problem. The following tables show income and expenses. Find the net monthly cash flow. So again, we start with the income first. Monthly income. So $650 a month for the job. College fund is $400 a month. But the scholarship is going to be paid over the course of the year. So we want to figure out what that is per month, which means we're going to divide by 12. And that would give me $500 a month. When we add those together, we will get $1,550 as the monthly income. Step 2 would be monthly expenses. Sorry, that Y went a little high. Okay, so $500 a month for rent. Now, groceries is going to be per week. Since there are 4 weeks in a month, we would multiply by 4. So that's $240. Okay, tuition and fees is going to be twice per year, which would be every 6 months. So instead of figuring out the cost for the year, what we could do is take the $3,600 and divide by 6, because if it's twice a year, $3,600 would be every 6 months, and that would be $6,600 a month. And finally, 120 incidentals per week. Again, if that's per week, then per month would be to multiply by 4, and that's $480. Adding these 4 numbers together, you would get a total of $1,820. The monthly cash flow is found by subtracting the income from minus the expenses. Monthly income minus monthly expenses The income, again, is smaller than the outgoing amount. So that's negative $270 per month. And again, if they asked you for an annual, you would just take this and multiply times 12 for a per year. So it's pretty easy. Same thing here. So step one is actually pretty simple. The income is only going to be $1,900 a month. The outgoing or the expenses, so that's why I like to call it outgoing, because when you have expenses, $800 for rent per month. Groceries is going to be per week, so 4 weeks in a month. This is, again, assuming all the weeks are equal. I mean, we know that not every week, every month has 30 days, but we're just going by that. Utilities is $125 per month. Insurance, $150 per month. So here's that twice a year idea again, which means every 6 months. So 420 divided by 6 is going to give me $70 per month. Gasoline per week, I'll have to go on another line. So that's $100. And then miscellaneous per month. So we just want to be in terms of the same units. This should give me a grand total of $2,005, so $2,005. And our last step is to find the monthly cash flow. Which would be the monthly income minus the monthly expenses. I think in your homework you guys will have ones where you have more income than you have outgoing, so I'm sorry that these were all negatives. Negative $105 per month. And then again, one more time, if you needed per year, you would multiply by 12. Last one. Assume your automobile insurance policy has a semi-annual premium of $650. So there it is. So if it's semi-annual, then let's just make a note that $650 times 2 would be the yearly. So $1,300 per year would be the premium. Just in case we need that. $1,000 deductible, so let's write that down. I just like to list this stuff just to help in case after I need the information. In one particularly unfortunate year, you had a collision repair bill of $1,120 and $1,660, but you're safe, so that's what matters. So your out-of-pocket expense for insurance and repairs, well, so the annual deductible and the premium for the year would be $2,300. We have those two numbers right here. And then you have, as long as you pay those, the collision repair bills won't be part of your expense because you've paid your premium and you've paid your deductible. And it's a per year deductible. If it was an each incident deductible, it would be twice, but it's only once because it's annual. What would your expense be if you did not have the insurance policy? So you would have to foot those bills on your own. And even though the bills aren't ridiculously high, it's still a little bit more than the policy. So it definitely pays to have that policy. Sorry that I kind of got rid of that. There it is. All right, guys, good luck with your homework. And it is due Friday. And please reach out if you have any questions.